Hello, friends. Every morning when you open the charts, your heartbeat quickens, filled with hope that today's trade might change your life. But as soon as you face a loss, your mind starts questioning, am I not cut out for this? If you've ever felt this way, this video is for you. Earning a profit in the market isn't as hard as controlling yourself. Trading in the Zone is not just a book. It's a mirror that shows you your biggest weaknesses: fear, overconfidence, doubt, and the illusion of control. Hidden within this book are 15 mental rules that can transform the mindset of every trader who keeps pushing forward despite repeated losses. But listen carefully. Each rule is a key to the next. It's a chain, and if even one link breaks, your entire mindset will slide back. So don't skip this video, because these 15 rules aren't just for the market. They're rules for focus, discipline, and growth in life. Let's move to the first rule. Rule number 1 says, anything can happen. If you truly internalize these 4 words, you'll step into a world where there's no fear, only discipline. Imagine this. You've analyzed your setup, checked RSI, Fibonacci, trend lines. Everything is perfect. Yet the market moves in the opposite direction. You panic, get angry, and wonder where you went wrong. But hold on, maybe there was no mistake. Mark Douglas says, "You took a good trade and still lost. That doesn't mean you did something wrong." The market won't reward you every time. It's not a person, not a system, not logic. It's a crowd of thousands of people making decisions every second, driven by emotions, fear, greed, hope, and madness. When such a massive crowd is betting in one place, anything can happen. Here's the real deal. If you don't accept that anything can happen, you'll always assume you know what's coming next. And when you think, this is obvious, it's definitely going down, that's when the market slaps you in the face. Because you were thinking in terms of predictions, while the market operates on probabilities. Mark Douglas clearly states, the best traders don't try to be right, they focus on performance. Your job isn't to be correct every time, it's to trade consistently with your rules. The first step is accepting that every trade is just a probability, not a guaranteed outcome. You're catching a trend, not predicting the future. This mindset frees you from fear, overconfidence, and revenge trading, because you've removed the toxic belief that you know what's next. Now you'll trade like a pro. Now that you've accepted anything can happen, the next question is, how do you keep your mind calm amidst this uncertainty? How do you press the button with confidence when nothing is certain? That's what rule number 2 teaches. Rule number 2. Think in probabilities, not predictions. Once you've accepted that anything can happen, the next question is, what now? How do you think? How do you trade? Mark Douglas says you don't need to know what will happen in the market. Sounds strange, right? You don't need to know what's next, and you can still make money. Yes, because money in the market comes from probabilities, not certainty. When you trade thinking, this time it's definitely going down, you're thinking like a gambler. But when you say, this setup has a 60% chance of going down, and if it doesn't, my stop loss will protect me, you're thinking like a professional trader. Mark Douglas calls this thinking in probabilities. It doesn't mean trading with fear. It means treating every trade as part of a long-term game. Professional traders know they'll lose some trades and win others, but if the system is sound, profits will come. This mindset frees you from emotions. No trade will break you, and no profit will inflate your ego. You become a trader connected only to the process, not the outcome. and that's the zone where consistent profits are made. But this is only possible if you accept that every trade is a unique event. Rule number 3 explains why two identical-looking setups don't always yield the same result, and why treating every trade as new is your greatest strength. Every trade is a unique event. This sounds simple, but if you truly grasp it, you'll escape the emotional traps that cause losses in trading. Imagine you took a trade 2 weeks ago. Same pattern, same levels, same indicators, same signal, and it was profitable. Now the same pattern appears again. You take the trade, but this time your stop loss gets hit. You're shocked. How could this happen? It was the same setup, but the market wasn't the same. Mark Douglas says, "No two moments in the market are ever exactly the same. Even if two candles look identical, the context behind them is never the same." Professional traders approach every trade as a new event. They don't carry the memory of past profits or losses into the next trade because they know that if they think like last time, they'll miss what's different this time. Mark Douglas says, "Expecting the same outcome from a pattern creates rigid thinking, and rigid thinking has no place in the market." Trading is a dynamic reality. Every moment is happening for the first time. This mindset prepares you for any situation. When you treat every trade as unique, you see the market with an open mind, not overconfidence. And only with an open mind can you make the right decisions. This is the level where you stop fighting the market and start reading it. Now that you've accepted every trade is unique, the next question is your mind ready to see it that way every time? If your mind is stuck in old memories, fear, greed, or expectations, you can't see the present. Rule number 4 removes this poison. Reprogram your mind, or it will keep repeating the same mistakes. Have you ever done this? Repeated a trade that was profitable before, or avoided a trade because it led to a loss last time? This is your mind's recording at work. Your mind clings to past feelings, whether the joy of profit or the pain of loss, and makes you react based on those emotions. Mark Douglas says, "Your mind is not built to trade, it's built to protect you. When you lose, it tells you to avoid the next trade. When you win, it urges you to repeat it." But both approaches fail in the market because the market is always new. Until you reprogram your mind, it will keep pushing you into old reactions. If your mind views every trade through fear or greed, how can you make the right decisions? Mark Douglas says, "You must train yourself to think from the market's perspective. You need to reach a level where there's no fear, no overconfidence, just a calm, objective perspective. This requires constant reprogramming, recognizing old emotions, stopping them, and returning to the present. Only then can you become a trader, connected solely to the process, not the results. When your mind reaches this calm state, you're no longer just a trader. You become a mechanical artist." Now, rule number 5 reveals a truth that shatters the biggest misconception in trading. Every failed trade is not your enemy. Ask yourself, when your stop loss gets hit, do you get angry at yourself or the market? Do you think, "I'm such a fool, I made the same mistake again, if only I had listened"? If yes, you're not alone. This happens to everyone who trades with emotions. But Mark Douglas shows you another path. He says, "A losing trade is not a failure unless you define it that way." A stop-loss hit doesn't mean your system is flawed. It's part of the system. If you took the trade following your rules, it's a valid loss. And if you didn't follow your system, even a profit is a wrong profit. That's the difference between a professional and an emotional trader. A professional knows every failed trade provides data. It's not your enemy, it's your trainer. When you accept this, you stop fearing the market. A stop loss isn't a blow, it's feedback. This mindset takes you to the next level. Those who fear shrink, but those who learn grow. Now that you've accepted losses aren't your enemy, the next question is, how do you control the fear that arises every time? Rule number 6 teaches, don't let fear become a trigger, make it part of your system. Fear isn't bad unless it becomes your master. When fear kicks in, a trader's mind enters fight or flight mode, leaving only 2 options: abandon the trade or overreact. Mark Douglas says, fear comes from the perception that something is happening to you, but nothing in the market is personal. Fear arises when you see uncertainty as a threat, not part of the process. But you've already learned that anything can happen. Every trade is unique, and losses are part of the system. So, view fear differently, not as a roadblock, but as an alarm signaling the need for focus. When fear arises, ask yourself, did I follow my system? If yes, absorb the fear. Don't act on it. Professional traders don't deny fear, they channel it within their structure. Fear becomes a voice saying, check your rules, check your risk, then click. Mark Douglas says, when you've accounted for risk, you're free from fear, and only then can you enter the zone. Now that you've integrated fear into your system, rule number 7 reveals the true meaning of confidence. Confidence doesn't mean you'll win. It means you won't waver even if you lose. When you enter a trade thinking, this is 100% going to work, that's not confidence, it's hope. Because when the trade goes against you, your confidence crumbles, fear creeps in, anger follows, and then comes revenge trading or overtrading. Your confidence only lasted as long as the market agreed with you. Mark Douglas says,